Welcome to another FB live show. And as you will notice that we had some difficulty in terms of audio visual, but you guys are all comfortable with it now. So today's topic is an interesting topic. It's all about value investing, and is value investing dead in the current environment? Now, before I begin my session, before I start to talk about it, I want to know how many of you are actually investing from a value perspective, or how many of you are value investor? Write in the chat box. Let me have a look. Let me see who is a value investor here. I see you joining from Malaysia. Hi, yo. It's been a long time since we met. That was in Kuala Lumpur years and years ago. I see Dashwin joining in, Gopal, and I see Gerald joining in. And it's good if you also mention where are you calling in from. This is wonderful time. In next 30-35 minutes, I'm going to share with you a new perspective about value investing in the current markets. Okay. So tell me if you are a value investor. Make a comment in the Facebook and let me look at that. Let me see. I will read it live, and I will know how many of you are value investors. I see Sagar joining in. Very good. Welcome, Sagar. Good. Is value investing dead? That's what we're going to talk about. So make some noise. I'm not seeing many of you making any comments on the Facebook. So drive that, write it so I can see. I see Gerald. I'm using the cash secured puts I learned from you, Manoj, to get value stocks at a discount. Fantastic, Gerald. Congratulations. Who else is a value investor here? Let's go ahead and hear quickly, so I can share and get started. How many of you are the value investors? Now I can't ask you to raise your hand because I can't see you, but at least I can see you via your comments. Okay, so let's get started. Is value investing dead? That is the topic we are going to talk about, and it's a fascinating area of investment. So before I talk about value investing, I believe everybody here knows what is value investing. What you're looking for is, whether or not the markets or the stocks are being offered to you at a certain value. How you determine value, and you figure out. We'll talk a little bit about that as well. And this conversation today is all around that. Feel free to share your thoughts. Feel free to share your opinion. It is not restricted only to my opinion, but whatever you feel about value investing as well. Use this Facebook comments as a conversation point between you and I to have this interactive dialogue. So let's first talk about what is value investing. And whenever someone is thinking about value investing, they're actually, the first picture that comes to mind is of Mr. Warren Buffett, right? Do you think of any other investor when you think about value investing? Let me know some of the names that you follow from a value investing point of view. Yeah, let's hear that. Let's see who else, or what are the different value investors you are following. It seems like many of you, because this might be the lunchtime in Singapore and Hong Kong, you are having lunch. That's why I'm not seeing many comments today about the value investing. Or it's just that you're not interested in value investing at all. Okay, very good. I see Isaac saying hi. This is good. Let's go on. Okay, fine. So I will go through it and then prompt you with the questions that might come up in your mind and you may mention. So whenever I think about value investing, majority of the time Mr. Buffett comes to my mind as a value investor. So here are some of the popular numbers or financial numbers that people look at from valuing. But even before, let's pause for a minute. When you are reviewing values, you are actually finding the right value of the stock or any underlying that you have. For example, if you go to NTUC cold storage or any of the grocery store and you want to buy a packet of milk, then the price is being given to you about $2 or whatever the price may be, $2.50. You buy that packet of the milk and you pay for it because you consider it to be the value of it. Now the value of that is driven by many things, right? The value of that is driven by the pricing that the manufacturer is already charging to the retailer, then the retailer is putting on to the, or maybe to the distributor, and then distributor is giving to the retailers, and that grocery store guy is putting on the shelf, and then you purchase and you give a price for that milk carton. Now let's say you were buying that milk carton for $2.50 and suddenly that the price he charges, or he increased it to $5. What would be your reaction? What would be your reaction if suddenly he started to charge you $5 for the packet of that milk? Probably the first thing you will think about is that it's not a good value, because your reference point now is what you were paying about a year ago or about a day ago, and you will compare price to that price. Now for some people, they may still buy at $5 because they might be using that milk to produce some more highly value added product, so their flexibility is there and they are okay to pay $5. So you got to think about that from a valuation perspective. Everybody might have their own way of thinking about value. So we got to standardize it, right? So when you want to standardize it, there are certain things that people look at from popular financial numbers perspective to generate some value models. Some of those are, for example, you're looking at predictable earning per share. How many dollars do they earn per share? Commonly also called EPS. Then another measure could be the gross profit margin. You look at it and you can use some multiples behind it or factor in to calculate what will be your ultimate profitable earnings from that particular share. Other thing could be looking at the operating cash flow. And then you can say, okay, yeah, fine, but let me see how much money does this business generate? And can we use that money to factor in and assign certain value and decide whether or not this stock is worth whatever price you are paying for it. Another area could be looking at from a dividend point of view. And you look at, what sort of payouts they are giving, and based on those payouts also you can work out what will be the actual value of that particular stock. You could also look at free cash flow, that not all the cash flow is, something that you should count on, but because they will be using cash for investing activities, or they might be using for operations and might be using for some other things as well. So you just want to count only on the free cash flow. There are some other areas as well, like if I were to sell that business from a book value perspective, how many times of that book value I'm paying. There are some more, for example, return on equity, return on assets, debt to equity ratios. You could look at capex, and you could also look at net profit margin. So there are multiple ways to look at it from a valuation point of view. Maybe one is perfect that you like, maybe another one is not perfect that you like, or you may think about some other parameters that might be useful. So now you start to get some picture that when you are valuing company, you need to have certain reference points to value that company. You need to know how to calculate it. You need to have the formulas for that as well, so that you can actually form some sort of valuation about that company. You might be using DCF or owner's earning and etc. And I'll show you some examples as well in today's session. And by the way, I will show you one company that I consider is to be undervalued currently based on the numbers and the initial analysis that I have done. And it might be wrong, it might be right. You may interpret it differently. You may run your own models to figure out and see whether or not you would like to have that company. So how many of you would like to know what company is that from a value investing perspective, even in the current market? Who would like to know that? Tell me in the comment section and say, yes, I would like to know that, Manoj. Tell me, show me the money. Just write, show me the money. Very good. Show me the money. Let's just keep going. So those will be some of the financial numbers that you could look at. But that's individual company. In order to make some sense, in order to use what is being, in order to use whatever you are actually valuing a company and make a considerable judgment whether or not you should go for that company, you also need to do comparative analysis. You also need to look at the competitors in the sector. So can you see how many parameters you will have to evaluate from hard facts and numbers point of view only to come to a conclusion whether or not that company is worth your money, whether or not that company is a good value. Now these were quantitative analysis. Quantitative means that you're looking at numbers and you use those hard fact numbers to evaluate the company. There may be some more methods. It's not limited to only what I'm sharing with you. but there may be many more. And I'll give you an example to show all this perspective so you can deep dive and have a different perspective from a value investing area. So now let's look at some of the qualitative things that you also need to look at when you are going through the value investing. For example, these are also called, very famously MOATs. So pricing advantage, a company must have some sort of mode that allows us to keep pace with the prices that are taking place in the markets. At the same time, there might be some barriers for switching. Like let's imagine, no, I don't want to imagine right now because you may think that there are certain other alternatives for that company, but think about that how locked you are with that company. Can you easily switch from one company to the company? Okay, maybe just take an example. Let's say Facebook. If you have been using Facebook, your friends are on Facebook, or maybe WhatsApp. Your friends are on WhatsApp, and everybody that you want to connect is on WhatsApp. You want to switch from WhatsApp to another messenger. You need to bring all of your friends and everyone who is in touch with you to that particular new messenger that you may want to use. Some places switching may not be that difficult. In some places it may be. Then we also need to look at and factor it. What is the value associated to that switching? So if you talk about, let's say, ERPs or company database management and etc., company may find it difficult to switch from one vendor to another vendor, and that might means that they will have to continuously spend money on that vendor. So switching costs can also be useful. But then there are other modes that you may want to look at. For example, economies of scale, whether the company is really big or not big, and then you take that the company, once they roll out a new product, they have some economies of scale and they can have some profits. Now I know most of you know this is not a rocket science, but these are, I'm just bringing it to your perspective so you think that I need to actually go through some of those things as part of my due diligence to value a particular company. It might also be into the industries or segments which may or may not be growing or might be growing. So let's say the newspaper industry, for example, the world has switched to online media. People are reading all the news on the news online. So chances are that the print newspaper as we knew it probably will be in a declining industry. Not at all the places, but at least in some places people's habit might be changing. So you may have to look at that as well. And then finally, you will also be looking at, let's say, for example, network effect. So we talked about that when you are looking at value investing, there is some due diligence you need to do, and you are familiar with it. You got to look at the quantitative numbers. You need to look at the qualitative sides as well. And then based upon that, you will come up with certain numbers, right? The number, the value that you want to associate to it. And that's one company. Now you got to do that for many other companies too. But let's just say that there is only one company that you are hugely interested in. This is the company that you just wanted to evaluate. You don't worry about the competitors. You just want to evaluate that company, and you look at whether or not there is actually a substantial value in that company that you should invest in the current market or not. And the more companies you find that are undervalued, chances are you would say that the value investing is working. Or if you had invested in a company that has delivered value, given you sufficient cushion, and it realizes its value over a period of time, you will say the value investing worked. Now, there are many other indicators that we can follow along from a value point of view, from overall market perspective, like Buffett indicator, and I will show you some examples as well that you can use to see whether or not the markets are all-time high. And we'll do some real-time research to look at on internet. These numbers are also easily available. So what I'm trying to say is that value is in that moment. It's undervalued or overvalued at that moment. And then you need to look at it, how many other companies are also offering similar types. So whether the entire market is also offering a value. And when we do that, we come to certain conclusion for one particular company. So the company first that I want to talk about is Tesla. How many of you want to know about Tesla? I will go into more detail. Just let me know in the chat box. I would like to know what is the spectrum on Tesla, and that's what I will talk about in a minute. Yes, Tesla. So here is a very popular method or a website for valuing Tesla. Now you notice that you'll find on Tesla there are 3 types of valuation. There are 24 analysts, and analysts are the financial analysts that we would say are highly capable. This is their profession. They know the numbers. They have been going through all the due diligence part to figure out the true value. Sometimes they visit the company, sometimes they visit the car showrooms, sometimes they talk to the customers, and there is a whole lot of effort that is that goes into producing research reports. And you can find these research reports from the brokers that you're using, and if you don't know, you can ask them. They can also link you to some of the research report about the particular stock that you have been following or you are interested in. So this is an example, classic example of Tesla. There are 24 financial analysts who are making a forecast on Tesla. 24. And we can safely assume that these 24 analysts are well qualified people, well qualified financial professional. And based upon this, based upon what their 12 months targets are, you will see the Tesla price varies from the low of $67 to $1,200. Can you see the amount of variation in those analysts? Super qualified professionals. And based upon the last closing price, which is $570, 570, you will notice that there is a huge variation, 67 to 1200, and the current price is 571. And then this site or whoever that may be, they are producing like an average target saying the average price will be approximately 645. So how would you know what is the correct value? Unless you do that analysis by yourself, you will find it very difficult to have the conviction in the price for that particular stock. So the very first thing, if you are going to invest your own money, is to figure out and do the value by yourself and test the numbers, look at their models and see whether or not you would like to follow that approach. So I've also run some numbers, and I'm going to share with you based upon different type of models that are being used to see what sort of valuation we will have. By the way, if you are a Tesla value stockholder, if you're a Tesla stockholder, make a comment and say, I own Tesla. Write that in the comment section and say, I own Tesla. And then it will also be nice if you can mention what is your price target of Tesla. Next question then will be, did you do that analysis by yourself, or you're relying on somebody else to do that analysis? And then review whether or not you have a solid conviction about the price that you are paying for that company. Okay, so I know Naresh from Hong Kong just mentioned that he owns Tesla. I know Isaac owns Tesla. This is great. Good to see all of you. Gerald says, I'm planning to own Tesla. Jyoti says, I own Tesla. This is great. By the way, so far, we are not talking option today. You see that? And if you are liking this, if it's opening up your perspective, hit some likes, hit some loves. Let me see, just make it more interactive and have fun about that with the company. Then I'm going to show you different models that I'm using. I see Desmond is also owning Tesla. Well done. So, depending upon what were their prices, when did they purchase it, and so on. Show me some love, show me some money. I'm going to show you next 12 models that price Tesla. Who wants to see 12 new different valuation models for pricing on Tesla? I'm going to see who is making those love and likes, and based upon that, maybe I will reach out to you because I will know who is liking it, and with that, maybe we can send you some information about that or some gifts and etc. By the way, we started this series about a couple of weeks back already, and we will be now moving on to YouTube as well. So I'm not sure if you have already subscribed to our YouTube channel. It's free. The link will be provided by my team. I suggest that you make sure and you hit subscribe right now itself on the YouTube channel. It's free. And then come back to this live, okay? Don't leave the site. We are going to give you the link right there. Just click the like, and I'm going to show you pricing of Tesla on 12 different models that I've run through. Let's just go ahead and see. So my team is going to give you the link for YouTube, but let's see Tesla. Here we are. We've got multiple models if you look at the screen, and based upon these, there is a pricing. So I'm going to take you one by one if you look through it. These are analyst targets. So I did not use that particular site. I've run through the research reports myself, run through many other valuation techniques and etc. And based upon that, I found the price varies from $150 to $1,200, and $1,200 you also saw there. So it reaches from anywhere between $150 to $1,200. And the market price, it's been ranging from $153 last year to $900 January this year. And in fact, if you were following in my Telegram channel, I mentioned to you on the Telegram as well as also on the YouTube there that, no, it was on Telegram, that 830, 840 plus minus 5% will be the short-term high for Tesla. And since Jan, Tesla hasn't been able to cross that price, and it's been actually sliding since then. So that was just a historical point. You will notice that from $150 to $900 has been the pricing in the last 52 weeks. Now let's look at some of the valuation techniques and where the price lies. And you can pick and choose. So based upon the 5-year discounted cash flow growth exit. So DCF here stands for discounted cash flow. Based on 5 years, that comes out to be approximately 354. If you look at based on 5-year DCF revenue, it comes out to be 421. If you look at 10-year DCF growth exit, it comes out to be 449. If you look at 10-year DCF revenue, it comes out to be 500. So modeling based on 5-year and 10 years using exactly the same thing, which is DCF method, revenue, or cash flow. Then we could look at growth multiples. There are other multiples, so I'm going to use 2 multiples here, which are also very, very popular. And based on those multiples, if you look through it, price to book multiple, it comes out to be 432. Price to sales multiple, it comes out to be $452. Then there are many more methods which are not so popular, but many people use it for their own analysis to figure out. EBIT multiple comes out to be 389. EBIT stands for earning before interest and taxes. And if you add D and A, that links to depreciation and amortization, based upon that comes out to be 700. 5-year DCF EBITDA comes out to be 667. P by E multiple comes out to be 383. Revenue multiple comes out to be 461. And if you use 10 years DCF EBITDA exit, it comes out to be $709. So you can choose whichever method you like. I just wanted to give you as a gift, as you are in this part of the session in the live, to see where the current valuation lies. So from current valuation perspective, actually there are only 2 methods, or rather 3 methods. I would say rather 1 method only, which produces higher multiple or higher price compared to the current section, which is EBITDA, which is earning before interest, taxes, depreciation, and amortization. Okay, you can run through your numbers as well, check with your spreadsheets and so on, and see whether or not those numbers make sense for your holdings in Tesla. You like it? You see how thorough it can be? And when you are investing your serious money, you got to be serious. You really need to go through the details and find out and go through the numbers and look at it and drive your conviction about that particular stock, whether or not you are really confident. And why you need to be confident? Because when the market prices fluctuates during that time, either you can hold on or buy more, depending upon your conviction, depending upon your analysis about that particular stock. So you could look at multiple ways and evaluate. There are some more famous numbers that I will like to bring to your attention. For example, Graham number, Graham moderate number, Graham growth number. So Graham here, I'm representing to Mr. Benjamin Graham, who was the mentor of Mr. Warren Buffett. And if you haven't read and if you have not learned, actually I would highly encourage that you read the book written by Mr. Benjamin Graham called Security Analysis. It was written about 100 years ago, but it's valid even in today's environment. And he had provided you all sort of opportunities that you could look at from multiple perspectives. You could look at from a net value, you can look at from a moderate number perspective, or you can factor in for the growth also. And you can work out those numbers for Tesla as well. So this is really, really awesome. These kind of things that you will need. But keep in mind, that's only Tesla. Now, if your interest is in electrical vehicle as a segment, EV, then you need to evaluate EV. Then you need to go through and figure out more about other companies which are in electric vehicle segment. And then you need to also evaluate whether electrical vehicle segment as itself is an industry which will grow or not grow. And maybe through that process, you will reveal some hidden gems which will allow you to capitalize on that undervalue and make a forecast about the future and grow your wealth with time and time and time. Okay, so you look at those numbers, look at the analysis, find the model that works, and so on. So what I'm going to do now to show you how numbers can also be misleading, or how numbers can affect your actual output. So who would like to see a real analysis, like a real model or spreadsheet live? Who want to see that? Let me know. You might have probably just seen on the internet and etc. I'm going to run this in front of you and about the company that I think is undervalued. That is just my perspective. Before you invest, you've got to do your due diligence. You need to run your numbers and make sure whether or not you like that company. I'm invested in that company and I will just share with this as transparently right there for you to learn something. So who would like to know about that? What company we are having? Are you enjoying it? If you're enjoying, just click like. Either like your comment, like somebody else's comment. Just send more likes, more and more likes to us on this. Okay, send some love if you haven't done that yet. Right. Let's just go ahead, because you see, I'm just talking to myself on camera, and on my camera there's no one to talk to except you. And how I can talk to you is only when you write some comments, or when you write some likes, or when you tell me where you're joining from. That also excites me, but just knowing that this message is spreading to more and more people. And if you've been enjoying for the last, so many FB lives that we have been doing, share those with others so they can also benefit from it. We tend to give gifts in these live sessions, so your investing and your education becomes better and better. We keep it short, sweet, 30 to 45 minutes kind of analysis or sharing session, so you all can enjoy over a cup of coffee. You liking it? You just keep saying in the comments, Manoj, we are enjoying these sessions. Please keep doing this. Then later on, I might even invite some of the guests to come over here, share their knowledge with you, and we can make it a better place for everyone. Just do that. So let's run through an example. So I'm going to show you an example on how numbers can change. So let me just give me a minute, and I'm going to take you to my model. What you're going to see on my screen is a discounted cash flow that I'm running for Intel. Okay, so this model will have, you will notice that I've worked through my calculations, run out the numbers, all those numbers are here, work the models, and these are the outputs. So when I look at Intel, and once again, these are my numbers, this is my way of calculating it. I may be wrong, and I'm not saying that this is 100% correct, so you've got to do your own analysis. You need to run through your own diligence to see whether or not these numbers are correct, whether or not these numbers make any sense. And you should not be investing just based upon what I'm sharing with you. You have to go back, run your numbers, talk to your financial advisors if you want to invest money. So the company here I have is Intel, INTC is the stock symbol. Current price or the last traded price is 54.01, and then I have certain other features here, which means your next year's free cash flow estimates, then the growth rates and the years and perpetuity growth rates, and these are some of the numbers which are used for calculating the value. And then I factor that into my models and I generate some cash flow based upon that. Now you will notice that I have something in yellow box and in the red number. It's called discount rate. Now some people use weighted average cost of capital, it's called WACC, to replace the discount rate. Some people use cost of capital, some other use cost of equity. There's not much of a lot of difference. There will be a little bit of difference, and but the concept is actually the same, and the concept is to simply just use a method to calculate what the price will be and your model price will be. Sorry for that, a little disturbance because something just popped up on my screen. Okay, so here I want to show you how the numbers change. Now, if I use discount rate about 9%, I get an intrinsic value approximately $91. Okay. Now, if I run gram numbers and growth numbers and etc., I get certain price which is $42, $53, and $108 based on growth. Now, this does not assume that Intel will die. It assumes there will be a growth for next 5 years, approximately 7% for Intel, and there will be a perpetual growth of about 3%. So those are major numbers to look at it. But I want to show you how numbers change, and you should focus primarily on this number, which is 91.95. And I'm just thinking, how can I make it bigger? I can't seem to find quickly, so I can zoom in. So, but you can just play and pause anytime you like later on, but this number will be there. So let's say if I keep the discount rate 9%, my price is 91. Now imagine that I change the discount rate to 8% and see what happens. I change this to 8%. Boom. Look at that. The price changed to $111. You see that? It was 91, and suddenly, just by changing that discount rate by 1%, my price becomes 111. Now let's say I make it even 4%, which is what we see currently in the markets. Let's just say 4%. The price becomes $593. So I can satisfy my desire by using whatever I like here to say, okay, this will be the number. But that is not the right method. There are ways that you can find out what is the cost of borrowing for Intel, and you can simply add risk-free rates to it. It will give you some reasonable number to tell you what will be the proper discount rate that you should be using. So cost of borrowing plus add some risk-free rates so that you know exactly what sort of conservative way, in a way, you will get as a discount rate. So if I make it, let's say 9% again, you will notice that I get 91%. But see how the growth will also change. I'm using 7.9%. Let's say I just make it 5%. My price suddenly becomes 75, and even my gram number, moderate growth all changes accordingly. If I make it 3%, the price becomes $66, and gram number is 42, 53, 64. Now, those are as of this moment based upon these projections. This may be right or wrong later. We can conclude that, and you do that analysis. So you will find that based upon the numbers that I ran through, and I look at the estimates for Intel, it seems to me that it might be a good undervalued stock at $54 currently. Now, of course, they have a business issues, and those business issues are around that Apple is going to produce their own chip and many other things. So I consider those to be industry dynamics, and I see that Intel is still producing some great cash flow, distributing the cash flow, and based on that cash flow, I can do it. Then there are some other methods you can follow along. I have some quotes from Warren Buffett in one of his investment newsletter where he talked about what is the owner's earning. You can use that as well and run through it. My objective is not to teach you value investing. My objective here is to let you know that this is the kind of due diligence you need to do for each company you want to get in and invest your serious money. So now I will just go back to the Q&A. Sorry, we'll just go back to the training, and I will talk about that in a second now. So when you are running any analysis, when you are looking at value, you need to think this thing. Value is what you get, and the price is what you pay. It's a wise words of wisdom, and think about it. When you look around and you look at shopping malls, do they run sales? Yeah, they run sales. Do they run sale for every product? Maybe sometime, maybe sometime not. So you will always find some stocks or some industries or some opportunities that are available for you at certain value or a certain discounts, or where you see that markets are being very, very conservative with them. Markets are not actually realizing the correct value of it. So you may still find some opportunities. So Intel was an example for the current market. And you're getting at that price because there is a underlying reason that Intel isn't really doing great and the people are not expecting that will keep on doing great, which is why you get it at certain price. So you will always have those sort of mixes in the market that will allow you to find value, that will allow you to get some good things at a reasonable price. So value investing is not dead. But what you need to keep in mind is the market situations, is the prices that you are paying, and is the conviction level. So I'm going to give you some 4 secrets that will help you a lot when you are thinking about it. Okay? If you follow those 4 things, regardless of the markets, and you do your proper due diligence, you may still be able to participate in the value. Are you ready for that? Who wants to know what are those 4 things? Let me share those 4 things with you. Let me just share with you 4 things. What are those 4 secrets that I call? The secrets are according to me, and I would like you to consider them. I would encourage you to consider them when you are doing your analysis, you're thinking about it. The number 1 thing is managing the risk. There are several ways you can evaluate and manage your risk. You can use options to manage risk. You can buy at a huge margin of safety to manage your risk. You can also, hedge it against some other pair, like you buy one, you sell another one. There are several ways of doing it, but you've got to figure out a way to manage your risk. If you manage your risk, profits will come. So this becomes the number 1 mantra, number 1 thing that you need to keep in mind. How do you manage the risk? Now, once you manage the risk, the second thing is always going to be capital allocation. Capital allocation. Repeat after me. Capital allocation is the key. And it is key because, guess what? Any dollars, oops, I just showed you my previous slides, but let's just go in here. That's okay, it doesn't matter because in any case, I'm going to give it to you, right? So any time, any dollars times 0 is 0. You got to keep in mind capital allocation. Even if that does not work out to be, even that particular value stock does not work out to be, that you should not be wiping out your capital. You should still be able to continue to invest and stay in the game. So that becomes the second most important thing. Now, once you have managed the risk, once you have the capital allocation, you will still go through the emotional ride. So how do you manage your emotional rides? There are 4 key emotions in the markets. You probably heard only 2, correct? How many you know? Mention that in the comments. Let me see how many emotions you know about the markets. Yeah, many will say fear and greed, correct? Yeah, fear and greed. But there are 2 more. It's called hope and regrets. So there are 4 key emotions according to me in the markets. Fear, greed, hope, regrets. 4 key emotions. So what is your tool? How are you going to manage the emotions? You need to have a process check in place. You might have managed your risk, you might have managed your capital, but during the volatilities in the market, it will throw you out. And then you might give up, even though you might have found a solid hidden gem. But because nobody values it, you might think that it's not just worth it. Maybe it's the time it will take for people to recognize the value, and suddenly it unlocks great fortune for you. But you need to learn to manage your emotions as you are going through. And lastly, if you just rely only on the facts and facts and facts, then you will miss out the big picture of future. So you need to also be in touch with the future. You need to have a right balance of facts and futures, because future is where the value will come from. Facts might be telling you, yes, this company is worth so much. But in order for someone to recognize and unlock that value and more, the future needs to be embedded into it as well. So if you keep those 4 things in mind, I'm very sure you can still sail through your value investing. Even in the current market environment, it is not dead. That's my verdict in a way. It is not dead. You just need to make sure that you are getting the value for the price you are paying, and you are managing these 4 secrets that I mentioned to you. Keep that on your trading station. Keep that near your desk. Keep that in your mind. Internalize it. You will be able to get better and better day by day. Okay, so if you have been enjoying it and you loved it, you want to see more money, go and check out OptionPundit.com. Make sure you bookmark it. There are more than 800 articles we have for you. Yes, I said that. More than 800 articles we have for you. Check it out. You will probably find any type of topic you're looking for inside OptionPundit.com. Share the website with others. It's completely free. Share the websites, share the tools, share the articles with other people and let them benefit from as well. And if you have not yet subscribed to YouTube, make sure you subscribe. My team is going to send you the link right now. Just click on that link, subscribe to YouTube right now, because we will go big. We will be announcing more and more videos on YouTube. It will be right there. You will be able to watch it. We can reach out to more and more of you through YouTube. Okay, so with all that, let's take Q&A. We are done with the session, pretty much keeping in within time for 45 minutes that we allocated for you. Let's take some of the questions. Hit some love, hit some likes, send to us, and let me have some live questions right there on the box that will appear soon. And I hope you have been enjoying this. And I hope you learned some powerful insights in today's sessions. Some of the time, it's a good idea to recap whatever you have learned from the session. It's not for me, it's for your own benefits, because when you recapture, it actually internalizes. You give a signal to your brain that this is what I have learned in that session with Manoj, maybe a lunch coffee like with Manoj in this part of Asia. And if you're calling in from other parts of the world, heads off to you. It might be different time zones joining in. I hope it was worth your time. Let's go ahead and let's see some of the questions that might be coming up soon. It will take me a few seconds before it comes on my screen. And if there are no more questions, we'll wait for maybe just a couple of minutes. Maybe give us some time for Facebook to show us. This will be real time on YouTube in a way. What's the intrinsic value of Tesla based on the sheet you shared? Gerald, I did not run the intrinsic value for Tesla based on that sheet. I actually ran the numbers for Intel, and the reason is pretty simple. As many of you know, I'm not really into Tesla from a holding perspective. So when I was looking for it, I wanted something that makes money, that produces cash flow, which is why I spent all my efforts to run numbers for Intel. In order to do it for any other company, it requires a lot of time to go through, find those facts, input into the sheet, and then run a number. So for this session, I did for a company that I actually have invested in and that I think is worth holding for the time being. So I thought I will give you as a gift the company as well as my approach. And I hope you like it. I see from Sharon, which is balance between facts and future. Wow, this is new for me. Thank you, Manoj. Yes, Sharon, welcome. Welcome. Balance between facts and future. Fantastic. Let's go ahead. And you can share this video. You can share this page or this live with other friends as well. It will be there on the Facebook. They will benefit. And if you ask any questions later on, when we get some time, we'll be more than happy to answer any questions you may have. We want to just keep sharing with you. You ask for it, and we are enjoying this dialogue and conversation with you. I see another one from Veera. Where can we get the powerful value investing calculator tool on the documented cash flow? Veera, it's not really like a rocket science to build that intrinsic value calculator. If you don't have it, let us know. Maybe we can find a link to share this with you. I'm just keeping the sheet with me because there are some other things that I do in it, and if I will give it, I will make sure that it's cleared from all perspective before we start distributing. Yeah, so we'll find a way to either give you a link, or I will reach out to some of my friends who do the value investing to give you a good modular spreadsheet. Next question is my view on the Chinese stock. So that's been the only Chinese company that I have studied, and I ran the number is Baba. And based on my projections and etc., I feel Baba is also currently undervalued. And I am, as a disclosure, I'm invested in Baba also currently. Very good. Let's go ahead. Any other questions from anyone here? This has been awesome. I mean, having an opportunity to have a dialogue with you in real time, reaching out to you while keeping the costs low, because costs do become an important factor in the business. So while keeping the costs low through a dialogue and a medium. And if you also have some topics, please feel free to suggest, okay, we would like you to talk about this topic or that topic. Share that with us. And we might as well, do an episode exclusively on that. Can we buy a put option on Intel? So Jyoti, if you buy a put option on Intel, that means you are bearish on Intel. So if you want to use options to acquire stocks at a discounted value, you should be selling, not buying. You should be selling put option on Intel. Very good. Let's go ahead and hear some other comments, maybe for 2 more minutes, and then we will look forward to seeing you in the next one. But in the meanwhile, once again, click subscribe on the YouTube channel. And of course, if you're not following on this Facebook page, that's also you got to do. Yeah. Okay. So if no more questions, then thank you so much. I hope you enjoyed it. It was my pleasure to share whatever I know here and bring this to your knowledge and bring this to your perspective and enjoy it. See you in the moment. For the moment, this is Manoj. I wish you all the best. Stay safe, stay healthy.